Every day we work hard to help you understand how to read these charts. And one of the main reasons is the next time there is a systemic market crash, you are not one of the millions of people who get screwed out of your life savings, out of the money you hoped to make. And folks, it is as easy as being able to read these weekly vertical crossovers on our charts, which you can see if you sit with us every day for 10 minutes and study these charts. I'm going to feel so accomplished in my life when that systemic crash does occur. And I hear from all the people that have trained with us for years and spent 10 minutes a day who are going to, I can just envision this in the future, write me and tell me, thank you so much. I did not get hammered. In fact, I did well when the market crashed. Why? Because the things called inverse funds are just getting out and buying cheap again. So let's jump into these markets today and see what's going on. Everything down for the day. Stocks down a little bit. We look at the S&P 500. What do we see as far as the weekly candle goes at the close of the market on Thursday? We have a green spinning top. Open box green spinning top means indecision, tending down. Price percent oscillator nonetheless is still heading up. Derivative oscillator continuing to lose energy. We go from the weekly to the 2-day. What do we see going on there? We see now, remember, we have just completed this latest 2-day candle. It pushed through the down trend that we saw on the down trend line that we saw on the 2-day chart. Still negative on the derivative oscillator. And again, it's gone flat, but it's still negative. The price percent oscillator is trying its darndest to pull away, not doing too well, still pretty much laminated. I can barely see it pushing through. I'm just hesitant to redraw it immediately. I think I'm going to wait. Let's look at the 4-hour before we do that. So we see we have a nice good size up candle, about the same size as the down candle that ended on the 8th. We look at the 4-hour chart. It has pushed through the 2-day trend line, but we see down in the morning where we have a spinning top, a red open box, and then another one, green one in the afternoon. I'm just hesitant to really redraw that. I'm just going to hold off. Price percent oscillator lost a little bit of energy throughout the day, and the derivative oscillator lost energy at the end of the day. So again, indecision here on these charts. I just don't feel real good about redrawing the 2-day just yet. I just don't feel good about it. I'm just gonna, I want a trend, folks, that we can track. And if we can't track a trend, we don't feel good about it, there's no reason to risk a bad trade, a bad play. We're just not going to do that. So lots of indecision in the S&P 500 down for the day, 0.05%. Nasdaq 100 down for the day, 0.16%. So 1/16th of 1% down. We do see so far a green up candle is trying to form. Does have a nice long wick on top, little one on the bottom. Derivative oscillator continuing to lose momentum. Price percent oscillator heading up. We go from the weekly to the 2-day, and that 2-day is pulling away quite nicely. See, things don't look clean on the S&P, but they look much better on the Nasdaq 100, pushing through on this latest 2-day candle, pushing through the 2-day trend line, derivative oscillator gaining momentum, price percent oscillator pulling away. We look at the 4-hour, and that's where we sort of see things topping. Again, we've got basically a sideways sliding down, derivative oscillator losing momentum, price percent oscillator still struggling to stay up. Price is above the 2-day trend line. Keep an eye on things and see how it looks on Friday. Our jumping in point, of course, was after the crossover in the morning. On Tuesday, we had a jumping in point in the afternoon. And of course, once we jumped in, we go back and keep an eye on what the 2-day and what the weekly look like. And the 2-day's pulling away nicely. So we'll continue to watch, see what we see, and continue to hope that this trend will continue up. Now, we're going to move away from stocks. And again, we keep that hope alive based on what the 2-day and the weekly are showing us. We go from stocks to bonds, and bonds ended the day down 0.70%. The up candle is still in effect as far as the weekly chart goes. We see a nice long wick on top. But of course, derivative oscillator now is heading down. Price percent oscillator is actually gaining downward momentum. So still in a confirmed up move, but weakening. Now we go to the 2-day chart, and what do we see there? Again, a weak candle, a red spinning top, longer wick on top, shorter wick on the bottom, derivative oscillator losing momentum, price percent oscillator still heading down. So again, we don't have anything sorting out on bonds yet. 4-hour chart down in the morning, further down in the afternoon. Still in a confirmed up move. Looks like it's heading to a down crossing. Don't have a trade in 20-year bonds. Why? The weekly is still confirmed up. 2-day chart confirmed down. Got to have both the 2-day and the weekly moving in the same direction before we can look at jumping into a trade. We go to gold. We look at the weekly chart on gold. Still confirmed up move, down 1.15% for the day. We have a green spinning top, means indecision, tending up. Price is trying to push through that 2-day trend line, still well below the weekly, gaining downward momentum on the derivative oscillator, price percent oscillator, hoping to see a cross before the end of the week. Hasn't happened yet. Again, waiting for that to sort out. We go from the weekly to the 2-day. 2 days continuing to head down as far as the price percent oscillator goes. Derivative oscillator lost a little bit of downward momentum. We saw this latest candle that was drawn, green spinning top. Price is still below that 2-day trend line. So we'll continue to wait and see what we see. Let the price percent oscillator guide us. And then we go from the 2-day to the 4-hour. Strong down in the morning, bit of a recovery in the afternoon, still in a confirmed up move. So we're going to wait and see how gold sorts itself out. We're sort of hoping that gold was going to lose its luster and really make a strong down move. We look at how great our weekly chart has been going back couple of years, even further. And of course, our gold chart is beautiful. Once that crossover occurs, we will be looking to short gold unless it bounces off that red signal line, starts heading up again. Again, we're just going to wait. That's the nice thing that we can do. We don't have to trade like professional traders on Wall Street do. First rule of trading, don't lose money. Second rule, make money. If you've not purchased our book, please do so. It's in its 8th printing. We appreciate your support. And of course, if you want to be a Patreon member, we have all sorts of great stuff for you there. Depending on the level, you can get a free book. You also get to be involved in our monthly Q&As. We take your questions, try to answer those. We also analyze the stocks and ETFs you'd like us to take a look at. All sorts of goodies too. Short chart training, Bitcoin training, and the special chart we have for that, along with our quarterly chart training. Thanks so much for being with us, my friends. We appreciate you. You can find the links to being a Patreon member and buying the book in the show notes. If you're not subscribed, then go to chartingwealth.com for free. You'll get our daily review, our weekly reviews. You'll get special trainings when we put them out. We have all sorts of stuff there for you for free. God bless. All the best from the whole team here at Charting Wealth World Headquarters.